Good morning, traders. It is Tuesday, and here's your quick roundup of the latest market movers from the US dollar and gold to oil and the Japanese yen, all shaped by ongoing geopolitical tensions and central bank signals. So let's start with the US dollar index. The dollar index weakened on Monday, falling to a low of 98.37 as fears over the immediate Iranian response and the potential closure of the Strait of Hormuz began to ease. This helped to cool earlier gains in oil prices and eased concerns about the renewed inflationary pressures. And dovish comments from the Fed officials, including Governor Michelle Bowman, signaled possible support for a July rate cut if the inflation stays low. And traders now expect around 55 basis points of rate cuts by the year end. And markets are also focused on Fed Chair Jerome Powell's upcoming testimony for clues on monetary policy direction. And meanwhile, flash PMI data showed both manufacturing and services activity expanding, though price pressures remain elevated. And technically, the dollar index struggles to find direction. It is kept by the 50-day moving average at 99.48 and has support at 97.61. The momentum remains weak, with the RSI below 50, suggesting the broader downtrend may persist unless the index breaks above the 99.48 to 100 range. So moving to WTI crude oil, the oil plunged over 9% on Monday, closing around $67 per barrel around Iran's retaliatory missile attack on a US base in Qatar caused no damage. This eased fears of further escalation. And earlier in the section, crude spiked to 76.74, which is the highest level since January, before the reversing. While geopolitical risks remain, Iran's threat to close the Strait of Hormuz, through which about 20% of global oil flows, looms large. Although Iran's parliament backs the move, the final decision lies with the country's National Security Council. And US officials have warned such action would be disastrous for Iran's economy, urging China to intervene given its energy dependence. And for now, oil markets remain volatile. The focus is whether the price can hold above the $70 mark. If tensions subside, a drop to the 66 and 64.7 region is possible. But should the Iran escalate further, especially by disrupting the shipping lanes, oil can quickly rebound above $70. Now let's talk about gold. Gold rose near 3,400 an ounce on Monday after the US military strike Iranian nuclear sites, fueling the market risk aversion. Although Iran signaled the readiness for retaliation, investors are watching whether the response includes the closing of Strait of Hormuz, and so far the conflict has not escalated into a regional war. And gold has spiked near 30% year to date and remains in a bullish trend supported by safe haven demand. That said, gold pulled back to 3360 after the initial rally. Market attention also turns to the Fed, with rate cuts anticipated later this year, and lower interest rates, along with geopolitical uncertainty, continue to support the gold. And on the technical side, the key support lies at 3330, aligning with the lower line of a 6-month upward channel and the 34-day moving average. And further downside could test 3300. And on the upside, the resistance is at 3400 and followed by 3452. And finally, dollar yen. The Japanese yen dipped below 146 to 145.95 against the dollar on Monday, marking its lowest level in over 5 weeks. And the dollar gained strength on geopolitical tensions following the US airstrikes on Iranian facilities. And domestically, Japan's manufacturing and service sectors showed improvement in June, signaling underlying economic resilience. And the Bank of Japan kept interest rate unchanged at 0.5% last week and emphasized a data-dependent approach. And Governor Yuda left the door open for further hikes, depending on inflation trends. While the yen weakened, it may regain some strength if the global risk sentiment stabilizes or the inflation in Japan picks up. And technically, the pair could rise towards the resistance at 148 and 148.65 if bullish momentum continues. However, any pullbacks below 146 may attract buyers with support seen at 145.3 and 145. So to wrap up, geopolitical uncertainty, central bank policy outlooks, and commodity swings remain the top market drivers. as traders navigate a sensitive environment, as staying limbo and closely tracking developments from Washington to Tehran will be essential. So thank you for tuning in, and I will keep you updated with the next market shift.